Picture this. All the capital in the world, $400 trillion, sovereign wealth funds, pension funds, corporate treasuries, global reserves, is at a pivot point. They stand at the cusp of shifting from analog systems into digital foundations. That massive pool of capital is not static, it's mobile, it's patient, it's strategic, and it will not wait forever. We are witnessing the dawn of a new financial paradigm where value, trust, and capital migrate to open, transparent, decentralized protocols. Today, we are not speculating about the future, we are participating in it. I invite each of you, lean in, open your minds, sharpen your senses, because what we are entering is not just a bull market or a boom. This is a super cycle, a multi-decade revolution in money, trust, and power. Imagine standing on the shoreline, watching a financial tsunami form on the horizon, $400 trillion in global capital preparing to shift, not by accident, but by design. The old world of money, slow, analog, centralized, is cracking under its own weight. The foundations that once seemed immovable are now trembling. Every nation, every corporation, every institution that holds wealth is confronting the same question: where does value truly live in the 21st century? For decades, capital sat quietly in bonds and cash, in real estate, in traditional equities. It earned little, produced less, and decayed under inflation and inefficiency. The money managers of the old world believed safety was found in stasis. But today, safety is in motion. Capital has become self-aware. It senses the erosion of purchasing power, the dilution of fiat, the collapse of trust in intermediaries. It is looking for a new home, a system that can protect it, preserve it, and multiply it over decades, not just years. That system is digital. That system is cryptographic. That system is permissionless, open, and global. It doesn't care who you are, what passport you hold, or which bank you use. It recognizes one thing: mathematical truth. And that truth is reshaping the very definition of money, property, and energy. When I say $400 trillion is moving, I don't mean it will happen overnight. Revolutions this vast unfold quietly at first, like a glacier sliding into the sea. But make no mistake, it is moving. Central banks are exploring digital currencies. Corporations are holding digital assets as treasuries. Sovereign wealth funds are analyzing blockchain exposure. Pension funds are allocating to tokenized assets. The architecture of global finance is being rewritten line by line, block by block. We've seen paradigm shifts before: gold to paper, paper to electronic, electronic to digital, but this is different. This is not just a change in the medium of exchange. It is a change in the philosophy of value. For the first time in history, we can separate money from politics, wealth from geography, and trust from intermediaries. That is not evolution. That is revolution. Think about the sheer magnitude of $400 trillion. That's more than the combined GDP of the planet over 4 years. That's the pension funds of teachers, the savings of families, the reserves of nations. It is not an abstract number. It is the energy of human civilization stored in monetary form. And now that energy is seeking efficiency. It is seeking sovereignty. It is seeking a home that cannot be inflated, seized, censored, or debased. The analog financial world is a patchwork of obsolete systems, banks that close at 5 p.m., wire transfers that take days, settlements that require human signatures, and middlemen who charge for every step. It's like trying to send an email through a fax machine. Meanwhile, the digital asset network operates at the speed of light. It settles value instantly, globally, with mathematical certainty. When capital encounters such asymmetry, it doesn't ask for permission, it moves. The first movers already see it. They are the builders, the innovators, the technologists, the investors who understand that information no longer needs a middleman, and neither does money. They see that $1 trillion of capital today could become 10 trillion in this new system, not through speculation, but through productivity, velocity, and trust. The $400 trillion revolution is not about greed. It is about optimization. It's about unlocking dormant potential trapped in obsolete systems. It's about allowing value to flow as freely as information does on the internet. For centuries, we digitized communication, entertainment, commerce, but not money. Now that final frontier is being digitized, and with it, every other system built upon it will transform. Imagine a world where capital flows like water, where ownership is transparent, where verification is instant, and where no one can pull the plug on your wealth because it lives on a network beyond borders. That's not science fiction, that's financial physics. Once capital learns it can move faster, safer, and smarter, it will never return to the old ways. So when we talk about a $400 trillion revolution, we are not talking about hype or headlines. We are describing a tectonic shift, a migration of value from paper promises to digital truth. The people who understand this early will not just protect their wealth, they will redefine it. The institutions that adapt will thrive. Those that don't will fade quietly into irrelevance. We are at the intersection of technology, energy, and economics, and history tells us that when such forces converge, the world doesn't just change, it transforms. $400 trillion is waking up. It is restless. It is ready to move. And once it does, there will be no going back. This is the beginning of the greatest capital migration in human history, from the old world of inflation, opacity, and control to a new world of freedom, transparency, and truth. The digital era is not coming, it's here, and the floodgates have already begun to open. For thousands of years, humanity has been searching for one thing, a reliable way to establish trust. Empires were built around it, religions were founded upon it, economies were governed through it. Every contract, every transaction, every exchange of value has always depended on trust. And yet the tragic irony is that the systems we built to secure it have often been the very sources of corruption, inefficiency, and decay. In the analog age, trust was institutional. We gave it to kings, banks, and bureaucracies. We hoped that men in suits sitting in marble buildings would safeguard our money, our property, and our future. But as history shows, power centralizes, incentives warp, and eventually the very institutions meant to protect us begin to extract from us. The trust we placed in them became leverage, and that leverage became control. But now, for the first time in human history, trust has been re-engineered. It no longer needs to be granted. It can be verified. The breakthrough is not a new currency, not a new app, not even a new idea. It's a new form of architecture, a trustless, decentralized, cryptographic protocol that replaces the need to believe with the ability to prove. That is the quiet, unstoppable genius of this new era. Protocols have become the trust engines of civilization. They do not lie. They do not rest. They do not discriminate. They execute the truth as code perfectly, predictably, and permanently. They don't care about borders, politics, or institutions. They recognize only mathematics and consensus. That is their power, and that is why the world will eventually run on them. When you strip away the noise, the price speculation, the hype, the volatility, what remains is the most profound innovation since the creation of the internet. the ability to create digital property and transfer it without a third party. For the first time, we can own something in the digital world that cannot be copied, counterfeited, or confiscated. That sounds simple, but it redefines the foundation of economic reality. Think about what that means. Every major institution in the modern world exists to guarantee trust. Banks settle transactions, courts enforce contracts, governance regulate currency, auditors verify records. Yet all of these are intermediaries, friction points that consume time, charge fees, and often fail under corruption or incompetence. Now the protocol replaces them. It becomes the auditor, the banker, the regulator, the ledger, and the judge, all encoded in transparent, immutable mathematics. This isn't science fiction. It's happening now, block by block, node by node, transaction by transaction. Millions of people every day are verifying trust, not through signatures and seals, but through distributed consensus. They don't know each other. They don't need to, because the protocol does the trusting for them. It's like we've discovered a new law of digital gravity. Before this, our financial systems were islands of information, isolated, inconsistent, and vulnerable. Now, everything connects through verifiable truth. Every digital dollar, every token, every contract is bound by the same immutable laws. The result is a network that grows stronger with every transaction, more secure with every block, and more valuable with every user who joins. When you understand that, you realize why the old financial system cannot compete. The analog world runs on trust by authority. The digital world runs on trust by verification. The old world required faith in people. The new world demands proof from code. One is fragile. The other is absolute. One is political. The other is mathematical. One is corruptible. The other incorruptible. Protocols are not just software. They are civilization's new backbone. They enable a world where anyone, anywhere can transact, store value, or build without asking for permission. They remove the barriers that have confined human potential for centuries. When the cost of trust falls to zero, innovation explodes. Entire economies can emerge where there were once only borders and bureaucracies. The great misunderstanding of our time is that these technologies are about getting rich. They are not. They are about removing the need for gatekeepers. They are about restoring power to the individual. They are about creating a world where trust is no longer a privilege granted by a central authority, but a right guaranteed by open systems. When a protocol becomes the trust engine, it rewrites the rules of human cooperation. It allows two strangers on opposite sides of the planet to exchange billions of dollars worth of value without ever meeting, without ever knowing each other's name, and to do it with more confidence than two banks that have been partners for decades. That is not evolution. That is revolution in its purest form. Every great civilization advances when it finds a more efficient way to store and transfer trust. The written contract gave birth to trade. The banknote gave rise to capitalism. The protocol gives rise to something greater, digital sovereignty, a system where truth is not dependent on authority, but guaranteed by design. And once a society experiences verifiable trust, it never returns to blind faith. The world will not go back to ledgers that can be altered, to currencies that can be inflated, or to institutions that demand belief without proof. The protocol has taught us the ultimate lesson that truth, when freed from human control, becomes the most powerful force on earth. That is the technology breakthrough of our age, not faster transactions or clever code, but the creation of a new layer of civilization built entirely on mathematical trust. And from this foundation, everything else, finance, governance, ownership, identity, will be rebuilt. There comes a moment in every technological revolution when the experiment becomes inevitable. The whispers of innovation turn into the roar of inevitability. For years, this space was driven by visionaries, technologists, and early adopters, people who saw the promise before the proof, but now the torch is being passed. The institutions, the great engines of global capital, have entered the arena, and when they move, the world changes. For a long time, they dismissed it. They called it a bubble, a fad, a digital mirage. They laughed at code competing with currency, at networks replacing banks, at people trusting algorithms over institutions. But markets are teachers and time is truth. As the old system stumbled under inflation, under debt, under inefficiency, a quiet realization began to take hold. This isn't speculation anymore. This is infrastructure. The inflection point is here. The biggest players, sovereign funds, central banks, asset managers, insurance giants, and Fortune 500 corporations have stopped ridiculing and started researching. Their analysts are modeling digital assets. Their boards are approving crypto exposure. Their treasuries are exploring tokenized reserves because they see what is coming and they know what happens to those who arrive late to paradigm shifts. These institutions are not naive. They understand scale, they understand risk, and yet they are moving in. Why? Because the numbers don't. Additional stores of value, bonds, real estate, cash have failed to preserve purchasing power. Every year, trillions evaporate silently under inflation and debt debasement. The old system is melting from the inside, and the smart money knows it. They are not chasing yield. They are seeking refuge. What they are discovering is a system built not on promises, but on mathematics, not on faith, but on proof. The blockchain doesn't need a rating agency or an auditor. It verifies every unit, every movement, every signature. For institutions that have lived through financial crises, currency collapses, and systemic corruption, that kind of transparency is not a novelty, it's salvation. The irony is poetic. The very institutions that once resisted this movement are now becoming its biggest advocates. The same banks that mocked digital assets are now building custody platforms. The same governments that dismissed blockchain as a threat are now drafting policies to regulate and adopt it. The same corporations that ignored the technology are now re-engineering their balance sheets around it. The resistance phase is over. The integration phase has begun. And when institutions adopt, they do not nibble. They commit, they bring scale legitimacy and velocity. They don't move billions, they move trillions. They don't trade for headlines, they reallocate for decades. The liquidity they inject, the credibility they bring, the infrastructure they demand, these become the catalysts that transform a movement into a megatrend. But their arrival also marks a new standard. Institutions demand precision, security, compliance, and governance. They do not gamble. They engineer. Their participation forces the entire ecosystem to mature. Better custody, clearer regulation, deeper liquidity, and institutional-grade infrastructure. The result is that what once looked like chaos begins to resemble order. The market grows up. Think of it as the industrialization of the digital asset world. The hobbyists and pioneers built the first prototypes. Now, the architects of global finance are scaling the machinery. This is how revolutions consolidate, through adoption by those who once opposed them. It's not the death of decentralization, it's the beginning of its permanence. Because when the largest players on Earth integrate with the network, they anchor it into the fabric of civilization. This is not just about investment, it's about survival. A corporation sitting on $1 billion of cash is watching that cash lose value daily. A pension fund managing the retirement of millions cannot afford to ignore an asset class that outperforms everything else over a decade. A sovereign fund tasked with preserving generational wealth must diversify into assets immune to inflation and political manipulation. The logic is undeniable. The math is merciless. Every CEO, every CFO, every policymaker who studies the data eventually reaches the same conclusion. Ignoring this is riskier than embracing it. The question has flipped. It's no longer why invest in digital assets. It's why not. And as these institutions align, they create a flywheel effect. Their capital funds infrastructure. Their infrastructure attracts developers. Developers create products. Products attract users. Users create demand. Demand drives price. Price validates the thesis and draws in the next wave of adoption. This is how the supercycle begins, not through hype, but through alignment of incentives at every level of the economy. Soon, what was once considered alternative will become foundational. Crypto will not compete with finance. It will become finance. The word digital will disappear because there will be no other kind. Just as email replaced letters, as streaming replaced broadcast, as the internet replaced print, blockchain will replace the old financial plumbing. And the institutions once skeptical will be the ones running it. This is the inflection point, the moment the movement stops being rebellious and starts being inevitable. The big players have arrived, and they are not tourists. They are settlers. They are building, integrating, and institutionalizing the future. When history looks back, it will not remember the noise or the volatility. It will remember this: the moment when the guardians of the old system embraced the architecture of the new one, and in doing so, ensured its permanence. The future of finance is not coming from the outside anymore. It's being built from within. Every great transformation begins with disbelief. The early signs are small, fragile, easily dismissed. People see the sparks and assume they will fade. But history is clear. Every revolution moves through cycles, and every supercycle begins when the world is still asleep to its magnitude. That is exactly where we are now. We are standing in the first chapter of a financial transformation so vast it will redefine the flow of capital, the structure of power, and the meaning of wealth itself. A supercycle is not a simple bull market. It's not about price charts or quarterly gains. It's an epoch, a generational wave of adoption driven by structural, not speculative forces. It starts slowly, almost invisibly, as technology meets necessity. Then momentum builds, capital compounds, and the movement becomes unstoppable. That's the nature of this moment. It's not hype. It's the beginning of the compounding effect that rewrites economies. Right now, we are in the foundational phase. Infrastructure is being built. Trust is being tested. Capital is exploring the terrain. The skeptics still speak loudest, but that's always the case early on. In every major transformation, electricity, the internet, mobile technology, disbelief is the default setting of those anchored to the past. The early phase always feels uncertain because the surface looks volatile while the foundation is hardening beneath it. What fuels a supercycle is not emotion, it's alignment. The convergence of technology, capital, and conviction creates a feedback loop. Each piece reinforces the others. As more participants enter, liquidity improves. As liquidity improves, volatility stabilizes. As stability grows, institutions join. As institutions join, legitimacy follows. And once legitimacy arrives, the cycle transcends speculation. It becomes structural. That's where the real growth begins. We are watching this unfold in real time. Every exchange built, every wallet downloaded, every protocol improved, every regulation clarified. These are the bricks of the new financial architecture. The noise of price swings distracts most people from the deeper signal. The system is expanding in all directions simultaneously. Adoption curves are steepening. Infrastructure is scaling. Awareness is spreading. It's like the early internet, chaotic on the surface, inevitable underneath. The early phase of any supercycle is also the most misunderstood. People fixate on crashes, volatility, and short-term movements because they are trained by traditional markets to fear turbulence. But volatility is the language of growth. It is the pulse of innovation. When something new is being born, it shakes the ground. The ones who understand this see through the noise. They recognize that each drawdown refines conviction, each correction strengthens the base, and each recovery accelerates adoption. In the early 1990s, the internet was dismissed as a toy. It was slow, unstable, and unproven. The incumbents mocked it, regulators feared it, investors ignored it, but quietly it grew line by line, node by node. Then one day it wasn't a toy anymore, it was the operating system of civilization. The same pattern is unfolding now, only faster and at a larger scale, because this time we're not just digitizing information, we're digitizing value. A supercycle doesn't depend on hype. It feeds on inevitability. The old financial system is weakening under its own weight. Too much debt, too much friction, too little trust. Every inefficiency becomes an opportunity for the new system to expand. Every collapse of confidence in fiat systems becomes validation for digital ones. Every attempt to control capital only accelerates its flight toward open networks. That's how exponential adoption works. Resistance becomes fuel. Look at what's happening across the world. Developers are building decentralized systems in every industry. Investors are allocating to digital assets as a hedge against inflation. Governments are exploring digital currencies to maintain relevance. Users are demanding transparency and autonomy. These are not isolated events. They are signals of a global shift. A network effect on a planetary scale is forming, and it compounds with every participant who joins. And yet, even now, most people don't see it. They confuse noise for truth. They wait for permission from the same institutions that are being disrupted. But by the time consensus forms, the supercycle will already be in full motion. The great fortunes are made, not by those who follow the trend, but by those who see the pattern before the world names it. This early phase is the opportunity of a lifetime, not because it's easy, but because it's early. Every infrastructure cycle begins in disbelief and ends in inevitability. We are standing at the point where technology has matured, institutions are awakening, and capital is mobilizing. That convergence is the ignition point of the supercycle. One day, people will look back and say, of course it was obvious. But today, it takes vision to see it. The foundations are still being poured, the scaffolding still rising, but the blueprint is already written. The laws of economics, technology, and human behavior have aligned. What we are entering now is not a phase of speculation, it's a phase of construction. The digital asset revolution is just beginning its exponential climb. The cycles of doubt and discovery will continue, but the direction is irreversible. Every network strengthens with use. Every innovation compounds with time. And once the feedback loop of trust, capital, and technology locks in, the supercycle becomes self-sustaining. This is that moment, the quiet before the acceleration. We are early, yes, but not uncertain. The trajectory is set. The momentum is building. The system is alive. And for those who understand what they're witnessing, this isn't just another cycle. It's the beginning of something civilization has never seen before.